Tesla stock was down a measly 5% today. We have seen Tesla sell off more than 5% on other quarters, and this was by far the worst miss we have ever seen. That has everyone asking, what's coming next for Tesla? What's most important, and is the stock ever going up again? Obviously, if you ask me in a closed room, I would say yes, and I think we're in for upside surprises coming on Tesla's earnings. I'll talk about that a little bit here in this video in relation to what's coming next for Tesla stock, but in fact, I think the thing we need to be watching the most is the data coming out tomorrow morning and throughout the rest of this week. We had a very clear and obvious breakdown today in the markets. Even though you did get a recovery towards the end of the day, you really can't say the NASDAQ or the S&P charts, at least, look good. They actually look like the start of a rollover into a correction, as you are now out of this bullish channel and you essentially gap down today. Before we get into all of this information, hit the like button as well as subscribe to the channel. It's free 99 and costs you absolutely nothing at all. And let's start this video with what Dan Ives just said about Tesla stock.
Call it as it is. While we were anticipating a bad quarter, this was an unmitigated disaster. First quarter deliveries was a nightmare quarter for Tesla, you wrote. Elon is now pressured by the street, and China demand remains very soft. And you also say, in this case, street criticism is warranted. But then I end, and you still have an outperform rating, and I wonder why.
Hey, look, I mean, for the long term, like in terms of the actual opportunity for EV, for full self-driving, for autonomous, that's still there. But let's just call it like it is. This is no smoke and mirror. I mean, if you looked up train wreck in the dictionary, you'd see a picture of Tesla's 1Q quarter. And, you know, I think the big problem is deliveries. How do you reverse the trend? And that's why I believe this is a fork in the road. In other words, Musk either turns this around, whether it's cutting prices, put the strategy in place, or David, I think we sit here maybe 3-4 quarters from now, and this was actually a seminal moment and the start of what could be some darker days ahead if they do not turn this around.
All right, but what does the turnaround look like? You say cutting prices. Clearly, they're facing more competition from Chinese EV makers, not just in the domestic Chinese market. So what do you do if you're Tesla?
I think you have to lay out the strategy. Okay, what are price cuts going to look like? When are the new models coming? What could software be as a percent of revenue? What's the AI roadmap? Right now, it's essentially playing darts blindfolded. You don't really have an adult in the room. The conference calls, as we've talked about here, have really been horror shows. So investors, they're hoping in terms of that, what's on the other side of this. Now, in terms of the growth, the opportunity, $30 billion in cash, they're in a phenomenal position from that perspective. But I'd say probably this is what I'd say in the last 5 years, probably the darkest period relative to what we're seeing in China. And this quarter, exclamation mark.
All right, but you talk about, the hope of investors. You still clearly have hope as well. So what do you base your hope on? You've been, the last 2 minutes here, you've been quite negative.
Mm-hmm. It's that we're 3-4% of automobiles are EVs. Is that full self-driving autonomous? You could argue that could be $1 trillion worth of value from a software perspective. The China story, you've seen the price cuts start to stabilize. They had a good week of the last quarter. So there are some optimism, and I still believe you could be toward 2 million units for the year. But this quarter, there's just no way to sort of glass half full it. This is one where even whisper numbers called 415K. 386, a disaster.
Yeah, that pretty much sums it up. I was shocked to hear Dan Ives suggesting that Tesla maybe cut prices further. In fact, that's probably the last thing we want Tesla to do. In all reality, as I've said before here on this channel, I believe Tesla is taking the approach of focusing more on profitability. And let me tell you right now, if I'm wrong on that, if this upcoming quarter, there is no sign of, Tesla working towards becoming more profitable, getting margins higher again, yeah, Tesla stock's going to be in the gulag for a long time, a very long time. But I think the writing is on the wall for Tesla. And I think they're focusing more on profitability now. I think they're actively doing that. I believe the Tesla back in 2023, when it was, we got to hit this delivery target. We have to do what we have to do to sacrifice margins to hit the delivery target. I think Tesla, maybe against what Elon has wanted, but I think others have maybe advised him to focus more on profitability, because at this point, there's not much you can do about where interest rates are. There's not much you can do about the consumer and the trueflation. Forget the government numbers that say prices are up 20% since the start of the Rona. Prices are up like 35-40% since the start of the Rona. If you actually nitpick everything out there, right? Rent, utilities, even water is like way more expensive than it was before. The grocery store, don't even get me started. These things are not things Tesla can control. So trying to cut prices to boost sales, that's just not a winning strategy, at least not for the business and not for investors. If you can grow the software as a service segment of Tesla's business, which is that FSD $199 a month, that's going to be great, and maybe some light at the end of the tunnel for Tesla to work towards and to focus on. But all you really need to get Tesla stock moving the other direction is earnings estimates going higher. That is the only thing that matters. And if Tesla sets the stonework for higher margins, maybe even slower deliveries, fine. We'll take last year's deliveries, 1.8 million, 1.9 million, 2 million, whatever the number is. If you can bump up the margin a couple percent, that's where Tesla stock gets really moving to the upside. And then maybe, I believe, Elon and the Tesla team may start to talk about the robotaxi network and give us a little bit of a guideline on when they think that could come, and that could also get Tesla stock moving in the right direction. Considering over the past 12 months, you have seen EPS estimates get destroyed, down over 50% for 2024. I've never seen anything like it, and it's probably not going to happen again in any other company you invest in, to see profitability expectations just falling through the floor. That's why Tesla stock cannot catch its footing. It doesn't matter necessarily, relatively speaking, this quarter or that quarter delivery numbers. It really has to do with profitability. Right now, Elon and the Tesla team have not yet shown the markets they're taking that step towards profitability. So when your delivery numbers come in this bad, it really hurts, because if you're not focusing on profitability, if you're not making more on each car that you're selling, and you're not selling as many cars, that's a double whammy, and that's really bad for EPS and for profitability. Now, Tesla did confirm their earnings on April 23rd. I think we could be in for an upside surprise. Again, Tesla and Elon focusing more on profitability, really throwing out the whole quarter by quarter delivery number thing. I don't think that matters to a lot of you guys anyways, but that's going to get the stock moving. Higher EPS, higher profitability. That means lower valuations for Tesla, or you're paying lower valuations, meaning the stock will rise on higher EPS estimates. And number two, if Elon and the Tesla team start to talk about future endeavors, the roadmap going ahead, if we get a good conference call, that would be a start in likely sending Tesla stock higher, including maybe some guidance around the robotaxi network, considering how impressive FSD V12 3.3 is. But enough on that. We still have a couple of weeks before Tesla gives us earnings. Let's discuss what's going on in the markets right now, what Wall Street is saying, and what you need to know heading into tomorrow. Because if you thought the last 2 days or so have been volatile, especially in the bond market, tomorrow could be much bigger. Long story short, I will give you a summary of what has happened the last 2 days. Yesterday, ISM manufacturing data came in positive for the first time since about October of 2022. That means maybe the economy is starting to do a little bit better. That means that the Fed really has no rush to start cutting rates. That puts the focus back on inflation. When you put the focus back on inflation, inflationary pressures in 2024 are what seem like only ramping up. So then there's really no need for the Fed to cut rates in 2024. But most importantly, yesterday, with the ISM manufacturing data, you get something called prices, and manufacturing prices came in way hotter than expected, like way hotter than expected. So as manufacturing is coming back, so are the inflationary pressures with it, and that's kind of a double whammy, right? That's bad all around. Well, equities have not reacted to a lot of bad economic data. Was it the last inflation report or the one before that? One that came in hotter than expected. And what happened? Stocks rallied that day, like 1.5% on the S&P. Insane. The markets have been very illogical in 2024. Logic just doesn't reason with the markets these days because earnings are expected to rise and we're pricing in a perfect scenario. The problem could be maybe it's not going to be as perfect as we think. Maybe we're not going to get 11% EPS growth. Maybe we're not going to get this soft or no landing. Maybe the Fed's not going to cut rates at all in 2024. These are all risks to the market that we're not pricing in. The bond market, on the other hand, has been pricing these in. The bond market hit that low at about December 27th, December 28th. At about 3.78% on the 10-year treasury. Well, no surprise that a lot of stocks have not been doing well in 2024. The percent of stocks, meaning the market rally, was at its strongest point on December 27th and December 28th. Ever since then, 10-year treasury yields have been rising, and your average stock has been declining. Well, it's been choppy with 10-year treasuries. 10-year treasuries are now at 4.35%. But over the past 2 days, you're up about 15 basis points or so. So the bond market has been reacting to the hotter inflation data, to the fact that the Fed's probably not going to be cutting rates nearly as much as the markets expect. And you have rallied like 65 basis points on the 10-year treasury yield in just the last 4 months, 3-4 months or so. Equities have not reacted to this at all. Well, Q1 was just so bullish and you had so much bullish positioning that investors towards the end of Q1, that was last week, they had to make a choice. Do you stay with what's been working, your AI stocks, your big tech? Do you sell out of some of those stocks? Do you hedge your portfolio, raise some cash? What do you do here? Well, last week we seen money go out of big tech into more interest rate sensitive names, which turning out it's not the area of the markets that is performing that well in Q2. But the problem is you had such a strong Q1. You were up 10%. Historically speaking, every time you have been up 10+%, January through March, you tend to have a very strong April through December. Only one time were you down, and that was in 1987. And we all know what was going on during that time, right? Inflationary pressures. You were down about 15% April through December. But it's pretty rare. So everyone kind of knows the next 6 to 12 months are probably going to be more bullish than not, as long as, well, earnings coming good, the economy stays strong, and people keep their jobs, and we ultimately do not have a recession, no matter what the Fed does. But the next quarter after a 10% move higher, well, doesn't tend to be that impressive because you normally need to see a correction after a 10% move in a quarter. So really what's happening is the bond market has been reacting to all of the bad news in 2024. Equities have not. And now that you're in Q2, it looks like equities are starting to react a little bit to the bad news. And you can see all of Q1 was basically up and to the right. Very little pullbacks. And anytime you did pull back, you basically retook that to a new all-time high. Basically within a couple of days, right, after seeing a sell down. Well, you have now broke down on the NASDAQ. You have now broke this bullish channel, meaning that you should have found support here for the bulls and made a new all-time high, essentially. You did not. You fell under this line here, this support line, and you fell down to the first level I have had here on this chart, which is 438. If you fall under that, that's where the downside gets larger. Coincidentally, you bounced at $438.03 today. So I think 438 showed today just how important that is. But you're very vulnerable. If tomorrow we get bad data, that could send the NASDAQ under this very important level and into a larger correction. And I actually think at this point, that could be the biggest risk for Tesla stock specifically. Unless, of course, Tesla decides to cut prices again. And then, yeah, well, that would obviously take precedence over any of the economic data that we get as far as causing Tesla stock to fall more. But let's be honest, Tesla just had a disaster for Q1. The stock was only down about 5%, which a lot of people would have assumed Tesla stock would have fallen further from that. You're pretty dang washed out here with Tesla stock being down over 33% in 2024. At this point, the only thing I think is not priced in is some, egregious event happening, right? That I'm not even going to speak on, but one of those could be, Tesla cutting prices. So it's actually very interesting where you are with Tesla because Tesla is priced for disaster and the broad markets are priced for perfection. So maybe that does limit any market-wide downside that we see kind of rubbing off to Tesla. Maybe if the markets did correct, you wouldn't see as large of a correction in Tesla, but maybe that's hopeful thinking. Let me know what you think down below in the comment section. Tomorrow, we are going to get ISM Services PMI. This number is expected to come in around 52.7. Last month was 52.6. So you're actually expecting the headline number to come in better than last month. ISM Services business activity is expected to fall from 57.2 last month to 56.7 for the reading tomorrow. So you're expecting that to fall about 5 points or so. ISM Services employment is expected to be the same at 48. Keep in mind, anything under 50 is contractionary. So employment is expected to be contractionary, which is surprising. And then anything obviously above 50 is, expanding or positive. It's ISM new orders. You're expecting that to fall from 56.1 to 56. And ISM prices, the most important part of the ISM data that's really going to be the thing that drives the markets tomorrow. That's expected to come in at 58.4. Last month was 58.6. So if you come in higher on ISM service prices, that's where you have a larger problem for the markets. That ISM data comes in at 10 o'clock in the morning, so you will be able to react to that, to trade to that. If you guys want to come join the trading community and see those numbers as soon as they come out and potentially any moves that we are making, check that link out down below in the description of this video. But later on in the afternoon, around noon, specifically 12:10 p.m., you're going to get Fed Jerome Powell that will be giving a speech. Powell has been so bullish recently, I doubt he kind of flips to more of a conservative or bearish stance. I think he has a lot of pressure by individuals currently in Congress and Senate to start lowering rates, especially considering it is an election year. And it just seems like the pressure is on Powell. That, let's just go back a little bit. Back in 2022, we were fighting to get the federal funds rate above the rate of inflation to bring down inflation. Now inflation on a year-over-year basis is what? 2.8% for PCE year over year. Fed funds rates at 5.5%. So by any metric there, maybe you should be cutting rates. But the problem is inflation has been rising again. So I understand why Jerome Powell is more on the bullish side, but he's definitely being a bit too bullish, I think. He really says things that the markets love, which is all fine and dandy if he's correct. And inflation does continue to trend downwards, and he doesn't have to U-turn there and become more hawkish again. So whenever Fed Jerome Powell speaks, there's always going to be a risk that he could change stances. In this case, a change of stance would be from his typical bullish position to more of a conservative, bearish stance tomorrow. I don't think that's going to happen, but, it seems like in this illogical market, anytime I think something is going to happen, the opposite happens. So if I think he's going to be bullish tomorrow, maybe that means he's going to be bearish, just kind of inversing what I think. Either way, I think you should be prepared for anything, and probably the most impactful thing will be, again, ISM service prices. Fed Daily today said if the labor market starts to falter or inflation comes down faster, we are in a position to cut rates more. So this could have really fueled some of that end of the day rally that you've seen. Seth Golden writes on X, equal weight S&P 500 is up more than 20% over the last 95 days. Has only happened 5 previous times since 2009, and you are higher 6 months later every single time that has happened in the past. Gene Munster says, I still believe Tesla is on the right track and this storm will pass. EVs are a better way to move a car and autonomy is a better way to get around. Tesla is investing in the future while other car makers are slowing their investment. Fedmester also said today 3 rate cuts for 2024 is still a reasonable forecast, but it is a close call. For someone that takes their cues from gold, this does have a bit of a familiar kind of chart. You can see 1974, you had a breakout of gold. 2007, you had a breakout of gold. And 2024, you're seeing a breakout in gold. These have all happened, these breakouts of gold, right before bad things have happened. Besides 2024, we will have to wait and see. But that's also a notable kind of trend of 2024 is this breakout in gold. Gold today was up 1.5%, up another little over 1/10% here in after hours. Gold is basically going vertical. Now, why is that important? Well, gold is seen as a safe haven asset, kind of like the Japanese yen, U.S. treasuries. When things really get bad, believe that or not, eventually people may buy treasuries if there is some kind of looming, something bad out there in the economy. But as of right now, it's about gold, which is fascinating. Now, unfortunately, gold's not a simple read through. Sometimes people buy gold because something negative is coming in the economy, like 1974, like 2007. Clearly, big money has more information than we do. So, you want to watch, see where the money is going. If treasuries start to get a bid as the markets fall, that's going to be a little bit more worrisome, but gold could be moving higher based on expectations the Fed is going to be cutting rates. Maybe because the, U.S. government is spending so much money that people are looking at gold as another alternative. It's really hard to say, but this doesn't look good. It really doesn't look good. This pace of a rally ever since October 2023, gold is up about 25.5%. Whenever you see that happen, you have to wonder if there is something darker looming out there in the economy. Throughout the rest of this week, we will get more economic data. I don't know what could be looming out there in the economy. It doesn't seem like people are doing that well, but anytime you get data, you get personal savings, bank balances, data released from banks, you get different kinds of credit reports. Things don't seem too bad, but again, markets are priced for perfection. If we do not get perfection with the economy, with the Fed, with just the spending rates of the economy, consumer, staying strong, that could be kind of a black swan event at this point. Now, specifically looking at the chart on Tesla, you want to be watching that downside about 158, really this trend line right here. If you don't find support there, then you're going to be in for a little bit of a problem. Now, what you've seen back here was this bull flag pattern that we broke down and continued to fall. Now, just charting kind of the low of that bull flag pattern to where we inevitably broke under right here and continue to fall, measuring this extended drop under the low of the bull flag, essentially, you ended up falling about 8% under that low. So just to make this simple, if the same thing were to happen again, that means Tesla stock could make its way down to about 147 or so. Just if we get the same exact chart pattern play out from this bull flag pattern that we had in late January and February of 2024, before we did get, the 7% drop and the continued selling pressure. If we get the same kind of fall here, that's going to be about another 8% lower from 160. That could put you into the high 140s. And to be honest, I'm not going to rule anything out here. Tesla stock could indeed fall a lot more, or Tesla stock could rally huge if I'm correct, and Tesla is going to focus more on boosting profitability in 2024. But honestly, be prepared for anything to happen. With that said, let me know what you think about this information down below in the comment section. What is your expectation going ahead for the markets, for Tesla stock? If we do go through a correction, do you think Tesla is also going to be hit pretty hard by that? Or do you think a correction would mainly focus on the areas that need correcting, like AI stocks and other big tech crowded names? Let me know what you think down below in the comment section. Your expectations as well are always welcome down there. In the meantime, hit the like button, subscribe to the channel, not because I asked, because if Emerson could speak more than Mama, Dada, and Baba, he would also say to hit the like button and subscribe to the channel. Am I right? 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 Yeah, he's definitely right. He loves his water cup, though. Neither here or there. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.